Hi there, this is Simply Stocks, and today I'm going to talk about endurance tech, which may continue the surge because the auto industry is coming back into shape. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about endurance tech, here's a small request that can you support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you will have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. And also, if you have a number of stocks with you and you want to talk one on one with me, you can directly email me and we can work things out with a fee. Now, the company established in 1985, Endurance Tech is into auto components manufacturing and they have marquee clients under its ambit. Primarily makes braking systems, suspensions, and transmission products, and have global presence with clients across Europe. The market cap of the company is around 20,000 crores, so it is a pretty decent mid cap at the moment. If you look at the numbers, and these are June quarter numbers that came out, so sales were around 2,100 crores, which is pretty good, and the profit was around 103 crores versus 96 crores. So sales were actually 1100 crores earlier, not 1 crore, but around 1100, 1200 crores earlier, and it went up to you can say 2100 crores. There was a decent jump in the sales from around 1800 crores to 2100 crores, and the profit of the firm was 103 crores versus 96 crores. It has low debt. Margins have shrunk over the years, and that was primarily because of the problems that auto industries have faced with a number of you can say supply side issues. Very strong combined promoter and institutional holding with 1.2% free float. If you look at the performance, stock has gained 50% in the last 1 year. It did extremely well, but over the last 2 3 months, it had been falling since June. Has been one of the most stable auto ancillary plays. Did fall during the 2020 pandemic, but has done exceedingly well after that, after the fall that took place. Raw material costs have also dented bottom line. As I mentioned, that a lot of their raw material costs have surged with the prices of metals, etc., surging in the last 18 months or so. But now things are looking like the cost will be peaking out because higher inflation has led to greater rate hikes. So globally, I think the prices of commodities should come down. Results have remained fine in a very difficult environment. It has produced decent results. It is not that the company has completely gone negative with all the results. And I think numbers are only set to improve going forward. I don't see that numbers will decline from here on in, and over the next 3 4 years should do well. So why there was a slowdown in the industry altogether? Auto industry was under stress since FY18 actually, and not from 2020. And pandemic just accelerated the decline in that framework. And commercial vehicle segment was the most hit, and most of its products are being sold to the commercial vehicle players. Economic slowdown also hurt the infra to the core, and so commercial vehicles were less sold. So even if they did not had if we take out the raw material cost impact, you could even see that in India at least there is a lot of slowdown with respect to the economy moving forward, and the pandemic only accelerated that decline, and now things are coming back into shape. So projection of further stress in the next 2 years meant that the stock fell sharply in 2020 and 2021, and that led to the sector being completely out of favor. But now things are coming back into place. In terms of technicals, major long-term support is around the 1550 levels, and 1850 to 2000 is a resistance zone. Stock is doing well and may consolidate. It has broken out of that 1400 1500 band just recently, but may consolidate as market sentiment is volatile at the moment for the next 2 3 months, at least for 1 to 2 months. It may consolidate. So opportunity will be to buy around 1600 1650 levels whenever the decline comes in, and looks like we'll take out all-time highs in a few months. I think it is looking pretty good, and I think we could have a situation where autos may rally big time in the second half of this financial year, as well as throughout 2023. So in my opinion, if you have it, then hold on to it and add on massive declines to 1400 1500 levels if that happens. And this cycle will turn around in few months. I think 2023 should be pretty good. It's a good 3 year play, no immediate reward. I think it's a doubler over the next 3 years. That's why I put that up in my Friday video. I think this is a stock that could go to 2800 3000 over the next 3 years, and put only 5% of your total holding into such stocks. So this was my video on endurance tech. Please like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post it. Can you support me on Patreon? Thanks a lot for watching.